Hi everyone, this is your September 2024 housing market update for the Calgary area and surrounding communities. Now, new listing growth has been driven by higher priced homes and rising sales in the upper price ranges were not enough to offset the pullback occurring in the lower price ranges as sales in September were 2003, 17% below last year's record high. Now, despite the decline, sales this month were still over 16% higher than levels traditionally achieved in September. And we are starting to see a rise in new listings in our market. However, most of the listing growth is occurring in the higher price ranges. Now, while demand has stayed strong across all price ranges, the limited choice for lower priced homes has likely prevented stronger sales in our market. And while the challenges in the lower price ranges are not expected to change, improved supply combined with lower lending rates should keep demand strong throughout the fall, but without the extreme seller market conditions that contributed to the rapid price growth earlier this year. And that's coming directly from our chief economist, Anne-Marie Laurie at Creb. Now, new listings in September rose to 3,687 units, the highest September total since 2008. And the rise in new listings compared to sales did support some inventory growth, but September inventory levels pushed up to 5,064 units, nearly double the exceptionally low levels reported in the spring, but remain below the 6,000 units we typically see in September. Now, improving inventory levels compared to sales and continuing to shift our market towards more balanced conditions. Now, in September, the months of supply reached 2.5 months. While this is a gain over last year's record low, conditions are still tilted in favor of the seller. Now, additional supply in the market has taken some of the pressure off home prices over the past few months, following stronger than expected gains throughout the spring. Now, in September, the unadjusted benchmark price was $597,000, slightly lower than last month, but over 5% higher than last year's levels. And year-over-year gains range from nearly 9% growth for detached homes to nearly 14% gains in the apartment condominium market. Now, the gains for each property type outpaced total growth in residential properties, mostly due to the shifting composition of sales. Let's look at what's happening in the detached market. So the 9% growth in sales over $700,000 was not enough to offset the steep pullbacks reported for homes priced below $600,000, causing September sales to total 942 units, a 17% decline over last year. Improved sales for higher priced homes were possible thanks to rising new listings, as that segment of the market is starting to demonstrate more balanced conditions for homes priced over $700,000. Now, as of September, the unadjusted detached benchmark price was $757,000, a slight decline over last month, but nearly 9% higher than levels reported last year. And it's not unusual to see some monthly adjustments in the fall, especially following stronger gains in the spring. Now, with tighter conditions being experienced for lower priced product, price growth has also ranged within the detached sector. The Northeast and East districts continue to report the largest year-over-year price gains. Now, semi-detached homes. September reported 299 new listings and 182 sales, causing the sales to new listings ratio to trend up over last month to nearly 61%. Despite the gain over the past several months, the improvements in new listings relative to sales have supported rising inventory levels. However, with less than 400 units available, inventory levels remain nearly 33% below long-term trends for September. Like the other types, recent gains in new listings are causing the months of supply to improve over last year's levels. However, with just over 2 months of supply in September, conditions continue to favor the seller. Following strong gains in the spring, in September, the unadjusted benchmark price eased slightly over last month, but at a price of $678,400. Levels are over 9% higher than last year at this time. Let's look at our row townhomes and what's happening in that market. Now, there was over 600 new listings that came onto the market in September, where over 70% of the new listings were priced above $400,000. While new listings improved across most districts, 34% of the new listings were in the North and South District, likely a reflection of the new home activity occurring in those areas. Now, sales in September totaled 377 units, slightly lower than last year's levels. Now, inventories in September rose to 747 units, a significant improvement over the previous 2 years, but still below long-term trends. Nonetheless, the rise in inventory relative to sales did cause the months of supply to increase to nearly 2 months. conditions continue to favor the seller, but improved choice did slow the pace of price growth. The unadjusted benchmark price in September was $459,000. This is 10% higher than September 2023 levels. Apartment condominiums, this is one of the busiest markets, and strong gains in new listings continued into September, with 993 units entering the market. At the same time, sales dropped to 502 units, causing the sales to new listings ratio to drop to 50% and inventories to rise to 16 and 23 units. Of the inventory in the market, over 72% was priced above $300,000, a significant shift compared to last year, where less than 58% of the listings were above that range. Now, gains in supply compared to sales caused the months of supply to rise to 3.2 months. This is the highest level seen since the end of 2021. Improving supply in the new home market is likely contributing to the rise in supply and has taken off some of the pressure off home prices. Now, in September, the unadjusted benchmark price was $345,000. That's 14% higher than last year at this time, and year-to-date prices are still averaging a year-over-year gain of 17%. Now let's look at some of the regional market facts and what's happening in our surrounding bedroom communities. Now, Airdrie, first of all, thanks to a boost in new listings relative to sales, inventory levels trended up in September, reaching 349 units, an improvement over the persistently low levels reported over the previous 3 years. With 151 sales in September, the months of supply rose to 2.3 months. While conditions still favor the seller, it is a significant improvement over the under 2 months of supply that has persisted since the start of 2021. And with improved supply, choice has taken some of the pressure off of home prices. However, with an unadjusted benchmark price of $551,000 in September, prices are nearly 7% higher than last year. Now, Cochrane, over the past few months, easing sales did not offset earlier gains, as year-to-date sales were nearly 6% higher than last year. However, like other areas, new listings in Cochrane have been on the rise, and the 50% sales to new listings ratio this month helped support a gain in inventory levels. With 174 units in inventory and 58 sales, the months of supply in September rose to 3 months, the first time it has reached 3 months since the end of 2020. And while supply levels are improving, they remain well below long-term trends. Nonetheless, the gain prevented any further upward pressure on home prices this month. In September, the unadjusted benchmark price was $578,000, similar to last month but nearly 9% higher than last year. Okotoks. So a boost in new listings compared to sales supported inventory gains. And while inventory levels have trended up over the past 3 months, 106 units still represent exceptionally low levels for the town. The months of supply reached 2 months in September, something we have not seen consistently since early 2021. And while this is a significant improvement from the levels seen in the spring, conditions still favor the seller. The unadjusted benchmark price in September reached $630,000, nearly 1% higher than last month and 9% higher than levels recorded last year. Now, if you're looking to buy your dream home or just make a move, I can help you. I'm going to help you simplify the home buying and selling process. My name is Danny Green, and I'm your local Calgary realtor with MB Real Estate Group, RE/MAX First, and I specialize in helping homeowners and home buyers navigate the real estate market in Calgary, Alberta, and the surrounding communities so they can move into a better home and improve their quality of life without having to worry about a thing. My email is danny@calgarysagent.com. My phone number is 403-605-6626. You can also DM me on Facebook. Just search Danny Green. Or you can DM me on Instagram. My username is @CalgarysAgent. And even if you're not looking to buy or sell a home right now, but you want to learn more about the market, the process, and other mistakes to avoid and best practices to do, subscribe to my YouTube channel because I create lots of educational content, and click on the bell icon so you can get notified when a video comes out. Or again, just reach out. I love helping people, I love real estate, and thank you for watching your September 2024 Calgary Housing Market Update.